Okay, so today we're going to be doing a pretty important video. This is going to be talking about the financial crisis coming up that everyone seems to be using as a talking topic. Now for us, what we're going to be doing is a step-by-step breakdown about what I'm starting to consider as factors which are concerning me. But this is not going to be any major dramatic video using some kind of clickbait title. It's going to be the step-by-step educational breakdown showing you what is concerning me and what you can learn from in the year going forward. Stay tuned if you want to find out more. Okay, so like I said to you, this is going to be talking about the global financial crisis. What people seem to be talking about is that in the year 2019, perhaps 2020, we are going to be experiencing a big financial crisis. Now, what I wanted to do in this video is firstly, break down a little bit of information about what is concerning me right now, but also make sure that I can explain a little bit of my point of view, my personal point of view about why media outlets are making use of this so much. Now, one thing you need to realize is that this is going to be an opinionated video. This is going to be my personal opinion. So other people might be sharing slightly different opinions, but once again, this is going to be as unbiased as possible, basing a lot of it on facts as much as I possibly can, and the opinions that I'm going to be listing, once again, are not opinions that are verified, they're just my personal opinions. Just to start out with, why should you be listening to this video? Let me introduce myself to you. My name is Morgan. I'm a professional trader that manages capital for clients based around the world. But on top of it, I also train students in over 28 countries around the world. I focus on spending my day teaching people about things to do with trading, investing, and wealth management. And that is also a big reason why I run my YouTube channel and I spend so much time making YouTube videos. It's to be able to just put a little bit of my time into something that could help someone else on the other side of the world that I haven't even met yet. It's a very special thing for me to do, and it's something I absolutely love doing. So like I said, for the purpose of this video, we're going to be listing up some of my opinions. Now, one thing I wanted to start off with by saying is on Twitter on December the 10th, I decided to send out 4 different tweets talking about the major concerns that I have in the financial markets. And what I'm going to do is read through those tweets, talk about some of that information, and then try and base it against some of the things that I'm hearing in the market right now that I'd be able to tell you as well. Now, just to give you a little bit of an overview background without wasting too much of your time, basically running up since 2008 financial crisis, we've had a huge amount of recovery in the financial markets, the global markets, but more specifically, if you have a look at the US markets have been leading the charge. We've had a huge amount of appreciation. We've taken the Dow Jones to all-time highs in many occasions, as well as being able to set records in certain things, like being able to set one of the lowest unemployment rates, being able to make use of very low interest rates for a long period of time, as well as being able to keep inflation down for a long period of time as well. Now, depending on whether you're looking at assets, you're looking at the stocks, the commodities, the FX pairs, as well as indices, everything has been performing slightly differently. But one thing that we have been able to see is that the market since 2008 is now hit the end of its 10-year run. And what a lot of people are starting to say is that's the end of the bull run. Now, a lot of media outlets are making use of this, trying to basically sell articles, sell reads, and sell views on their channels or their pages or on their articles in order to try and create some sort of dramatization around the fact that we could be running into a financial crisis. Now, the problem is that this is a very sensitive topic to talk about. It's not a very easy thing for any person to talk about if they are trying to actually be unbiased and try not to scare anyone off. But what I was able to do in these 4 tweets is just give my personal opinion of what is concerning me right now and why I'm taking a little bit more of a risk-off approach, not expecting that next year is going to be a very easy year going forward. So like I said, to start off with, I've got the 4 tweets over here. So what I'm going to do is read through them from top to bottom, tweet number 1 all the way down to tweet number 4. And I'm going to basically explain a little bit about why I said these certain things and exactly why I think they are pertinent for this video. Now, to anyone who's interested in following me on Twitter, it's Morgan B. Sampson. I spend a lot of time providing Twitter updates, live trading analysis, trade ideas, as well as posting up a huge amount of my trades that I open and close onto Twitter. So anyone who wants access to that, make sure to follow me there. But what we're going to be doing is just giving a breakdown of these 4 tweets. So just to start out with, tweet number 1, I'm going to read to you. Starting to see a great deal of global risk in the financial markets. I'm not liking the political and economic instability that is witnessed all over the world. It seems as though the markets are spinning on a knife edge. Now, what I want to do, basically clarify 3 different things is, number 1, I talk about the political instability, number 2, the economic instability, and then 3, how the financial markets are basically spinning on a knife edge. Now, to start off with, the reason why I wanted to talk about these 3 major things is because right now in 2018, 2017 was an incredible year of growth, but 2018 we had a market correction in February and we had a market correction in October. Now, both those market corrections basically wiped out majority of gains for 2018. So 2018 is not only seen as a year where we were able to make a huge amount of incredible headway in certain things like financial policy, in certain things like the stock market, growth to the global industry, depending on where you look in the world. But the problem is that we basically wiped out majority of the progress. Now, the reason why I wanted to mention first the political instability and the economic instability is because those were 2 major contributing factors. To start out with, there is so much political instability around the world that we're looking at right now. If you look at anything from the emerging markets, you look at Turkey, you look at South Africa, the country that I'm from. If you look at certain Asian countries, you look at the Philippines, how they were battling ISIS for almost the entire year, destabilized basically their entire economy. You look at certain Saudi regions, you look at Syria, the issues that have been happening in Syria. Very, very sad problems. Now, these might be slightly smaller countries, but that has caused slight political instability to the allies as well as to certain other bigger countries. Say, for example, Syria. What happened in Syria caused a lot of political instability to Iran and to Russia. So even though it might be considered a very small country, the knock-on effects to first world countries is major. The other one that you can also have a look at is the first world instability. You've got the instability between Mexico and the US later on in the 2018 year. You've got the China and US trade wars, which has been occurring for a huge period of time. Towards the end of 2018, you've got the Yellow Vest protests occurring in France, where basically Macron could land up in a position where he could be removed as president because of a vote of no confidence. And it's not necessarily because he's a bad president. It's because there's people in France that can't afford the taxes he's imposed, in order to try and bolster economic development for the eco-friendly and for the world of electric cars and trying to reduce the amount of petrol and diesel consumption. But the problem is those tax hikes are so expensive that people can't afford it, and now they want him out just because of that. So even though it's a good thing, he might leave because of it. You've obviously got the stuff between Angela Merkel, how she basically nearly lost complete control of her party in Germany during the 2018 year. On top of that, you've got Brexit. I mean, Brexit, there is so much stuff you can talk about there. So there are so many different things, and I can continue to go on and talk about almost every single country, how there's been political or economic instability. Now, the economic instability that I can talk about is talking about certain things to do with the fact that we had 2 global corrections in the financial markets, the fact that we are battling certain problems. Let's say, for example, Germany is battling hyper low inflation, even though they are trying to hike interest rates and focus on trying to drive up that amount of inflation, try and fix inflation. You've got the US, who, although did have a very good stimulus over the 2018 year by basically, sorry, I just had a phone call there. But basically, if you have a look at the economic instability, how there were so many different aspects around the world that basically completely destabilized the world. And just going back to talking about the US, how even the US dollar had quite a good lot of stimulation over the 2018 year. There was a massive amount of arguing behind that. Talking about how inflation might not be at the target, how they were hiking beyond the interest rates that they thought they should be hiking. The Federal Reserve, with Jerome Powell now coming into power, there was a bit of a shift in the guard change there. So what I'm going to basically talk about is some of the aspects that I think are concerning me most right now, and then basically talking about why I listed up some of these things. So some of my biggest worries that I talked about in tweet number 2 were these things. So talking about the massive rioting in France against Macron, the very bad outlook for May, the possible failure, so talking about Brexit, the huge tensions between US and China, arrested CEO and daughter, trade tensions mount, the US, the global debt cycle is looming. So talking about all of those points in my previous slide, I basically listed them up before I got into the slide. That was specifically because I just wanted to try and give you an introduction to this video. Now, talking about the next tweet, I basically added on a few different things, talking about the Federal Reserve strongly stimulating a now expensive dollar. I'll talk about that. The foreign debt holders overwhelmed by rising debt interest rates. Instability to oil prices, higher danger for EM countries, recession timelines closing in. So just going back to the first point now, some of the things that I have addressed and haven't addressed. So talking about the massive rioting in France, we have definitely discussed that, but the big one is that France, Germany, and the UK are definitely seen as three of the major powers in Europe right now, with Greece and Italy basically experiencing major debt financial crises. The political leaders of those countries are not really leaned on for anything at all because they are just under so much stress. With Macron now leaving, possibly leaving under the vote of no confidence, with Theresa May also having experienced a vote of no confidence, winning, but possibly also landing up in some hot water with Brexit, and then Angela Merkel having to regain power of her entire party, it's definitely seen that there is a lot of instability to the leading, the political leaders in the whole of Europe. Now, Macron plays a very pivotal role in this sense, given the fact that he is one of the males between the three of them, the fact that he is trying to focus on growing business development. He is focused more towards the economy, more towards trying to get growth going over there. But the problem is, if he's not able to do that, he's going to destabilize France's economy. And that could mean a lot of problems for the whole of Europe. The problem is that the three major economies that are helping drive Europe is Britain, Germany, and France. Now, if Britain leaves the EU next year, you're going to see a lot of capital outflow from Britain moving into other parts of Europe. But the problem is, if France and Germany are destabilizing, where's that money going to go? It's going to go out of Europe. So that is a big problem there. Another big part is having a look at the outlook for Brexit and May, Theresa May. I'm not really going to focus on that. I think that video really deserves its own video. So let me know down below if you want me to do a separate video on Brexit and Theresa May alone. Huge tensions between US and China, the arrested CEO and daughter. Arrested CEO and daughter, I'm also not going to talk about that topic. I'll put a link down below to an article talking about it, trying to explain it a bit more to you. But US and China have been locked at heads in a trade war that just has not been making any progress at all. So that is also a major issue, is what is going to happen for the years going forward. If we land up in a financial crisis and China and the US are not working together, that could cause a huge amount of instability for us. Talking about the global debt cycles looming, now the problem is that during this massive period of growth since 2008, a huge amount of countries seeing this amount of growth had been taking on a lot of debt. And that kind of takes us to the next slide as well. So the things that I was talking about, the Federal Reserve strongly stimulating a now expensive dollar, the reason why I say that is as interest rates hike up on the US dollar, lending on the US dollar is much more expensive. Now the problem is, if you have a look at the second one, foreign debt holders overwhelmed by rising interest rates, a huge amount of debt holders around the planet are holding their debt in US dollar. So if the US dollar is constantly becoming more expensive, then their debt is also constantly becoming more expensive, and they will have to pay more and more and more. Some of these guys might have to refinance their debt, some of them might default on their debt. So it's an incredibly dangerous process when you have a huge amount of foreign debt holders holding the US dollar, but you're trying to hike interest rates to pull down inflation and try and stabilize the US economy. While doing that, you're going to destabilize all of the emerging markets economies. Now, the problem about this is a huge amount of emerging markets economies try and focus on producing a lot of their wealth from oil. Now, what we've seen in 2018 is the global oil markets have been in a steady sell-off. Steady sell-off all the way down to close to $50 a barrel on US crude. Now, if you have a look there, I was talking about instability to oil prices, huge danger for EM countries, recession timelines closing in. Now, the big one is having a look at the global debt amount that is being held in US dollar that is now being refinanced because interest rates are now being driven up so high that is going to put pressure on EM countries. Then the fact that these EM countries who are relying on oil in order to produce their wealth, now they're not selling at $80 a barrel or even thinking that they were going to $90 a barrel, they're barely selling at $50 a barrel. So they might be lucky if they're making a profit. Now, this problem is they not only took on a huge amount of debt to get their production levels up and get their production levels going so they could produce at a higher price. Now that the price has fallen, they've got a whole lot of debt they have to pay off, and then oil is not selling at a good price. So there is a frighteningly dangerous correlation between what they are selling at for the selling price and how much debt they are holding and what country is that debt coming from. If all of that debt is in the US dollar and the US dollar continues with their interest rate hikes, that US debt amount that they owe is just going to go up and up and up. Now, it can definitely be said that there are easier ways to handle this relationship, but the problem is looking at this from a bird's eye view is a frighteningly dangerous scenario for emerging market countries. If the financial crisis hits, the first countries to go down will be the emerging markets countries. And this is a major issue that I've been spotting. Now, the next point is talking about the recession timelines. Now, the reason why I was talking about 2008 financial crisis, we're now 2018, over 10 years, is that we have basically seen that close to every 10 years, maybe a little bit less, maybe a little bit more than every 10 years, we've got a financial crisis or a bit of a financial recession where the markets take a big, strong dip, 20% sell-off, 30% sell-off, depending on where you look at in the world, and then the market begins to recover. But now we got to have a look at what are we going to be experiencing as a massive hit in that process. So going on to the last slide, that is, my opinion, my closing opinion to all of it is just to say my opinion on this: be wary, take time to reconsider all decisions, diversify and mitigate, select robust opportunities, and most importantly, plan for a recession. Although it may not happen anytime soon, we should be ready. Now, one thing I can make very clear to you in this video is I'm not trying to scare anyone off at all by creating a video talking about the financial crisis. But what I would like to do in this video is start listing up some of the most important factors that I'm considering right now. So you obviously have seen that I'm talking about Europe, the fact that there is a little bit of a tripartite tension between Britain, Germany and France. You've got the problems with the US and China. You've obviously got the problems with US itself between the Democrats and the Republicans, who's going to take to power over the next couple of years. Then you've got the biggest issues talking about the EM countries, talking about global debt holding with the US dollar, as well as the oil prices, and most importantly, the commodity prices for things like gold and silver and platinum, which are also very sold off over the long term. Now, the most important part is that as a trader, you can prepare for things like this. Sometimes we are prepared for eventualities that never ever occur at all. There's tons of things that I've had to prepare for that never ever happened. So that is also an important part that you need to consider, is that although we might be preparing for a financial crisis, it might not happen now, it might not happen a year or 2 or even 3 years' time, but we should definitely focus on it. Now, these are some of the things that I think you should definitely study, you should consider when it comes to the financial crisis. And one thing I'd also be able to do is actually talk a little bit more in the future about everything to do with a financial crisis. I think it's very important that I make use of this platform to try and share a bit more information with everyone about what I think is going to be happening in the markets going forward. Now, once again, this is just my personal opinion, but I definitely think this opinion would be able to help at least a few of you. And if I can help just a few of you, that makes a difference. Now, to all of you, we decided to do something new and pretty interesting. I love reading books, and I know how important books can be for you. So what I'm going to be doing every single month is listing up a new book that I have read that I think is a very important book for yourselves as traders, investors, and future wealth managers. What we're going to be doing is just listing up the simple book, perhaps possibly doing a book review on these books, but at least giving you a monthly topic that you can go and buy for yourself, whether it's an ebook or even the hardcover book, and you can read it for yourself, just taking my opinion of what I think of the book. And from now on, we're going to have the book of the month sitting in the background every single time I'm doing the video. Now, the book we're going to be talking about today is The New Trader's Tax Solution by Ted Tesser. Now, this is I will say, sorry Ted, I'm not being too rude, but this book is a tad bit boring when you get started with it. But what I came to realize is one of the most important parts about making money is how you structure your investment tax. Now, this book is very clinical. It's more for the investors, the wealth managers. But what I came to realize is reading this book, I was given this book by I think it was my parents gave it to me when I was about 17 years old, because I was so fascinated with trading and investing at that time. They decided to give this to me and teach me about what is so important about taxes. Now, I read this book, I had a look at everything inside this book, and I decided that it is going to be a book that I read every single year. What I came to realize is a vital aspect about taxes is if you structure them correctly, if you understand taxes perfectly, you will maximize your profit. At the end of the day, if you're taking X amount of profit from your investments every single year, that is your gross profit. You still have to pay taxes on that depending on where you are in the world. What I recommend to all of you is have a look at this book. There is some very good stories in it. There's a lot of information for you to learn about, and definitely stuff that you have to do because everyone has to pay their taxes. Unless you're in a tax haven, then obviously for you, you don't need to worry too much about it. But this is going to be the book of the month. I possibly will do a book review on it. Obviously, we're sitting in December, the festive month, so I might not have time to do it. But like I said, every single month we're going to have a book going forward, and this is going to be the book for this month. I'll make sure to put a link down below in the description, possibly to Amazon, I think would be best for everyone to go to. And to anyone who wants to buy the book, ebook, hardcover book, they can make sure to do that as well. Let me know what you think of this. But like I said to you, this is just going to be talking about the financial recession and what I understand about it. Once again, my personal opinion, so don't try and jump down my throat saying some of the things I said was wrong. This is what I see about the market. To anyone who thinks that we should do another part 2 of this video, talking possibly about Brexit or talking about the US-China trade wars, the tensions in the political system in America, I'd be able to do some videos like that. So let me know in the comments down below. But to anyone who wants to find out a bit more about what we do, how we train students in over 28 countries around the world, like I said to you, I run an online training academy. I run a 12-month program where I train students from all over the world. They're able to access an online training academy and study through their computer or through their mobile device. They get access to private coaching on top of that, extensive tests, assignments, as well as monitoring every single week from myself and my team of coaches to make sure they are developing every single week. We teach them about trading, investing, and wealth management, focusing on trading Forex, stocks, commodities, and indices. To anyone who wants to find out a bit more about that, you can visit www.msequitiestrading.com, or you can email study@msequitiestrading.com to find out more information directly from our team. Links down below in the description to any other videos that we would like you to access. There's going to be an I button in the top corner that you can click on. Have a look at some of our other videos available that are relevant to this specific topic, and I will see you in the next video. Cheers for now, everyone.